This is a video to help you with a comprehensive review problem that is at the end of chapter 11. So those of you that have the actual physical book, it's on page 425. Those of you that are using the ebook, again, go to the left side of Connect, and then it's past the serial problem. You'll find the comprehensive problem as well. This is for a company called Bug Off Exterminators. They provide pest control services and sell extermination products manufactured by other companies. And you will see here that you have the unadjusted trial balance for December 31st of 2021. What you're going to do is you're going to complete the worksheet, which I'm going to help you with the adjustments for this. Then you will journalize the adjusting entries. You will prepare an income statement, which I will talk about that when we get to that in just a few minutes. The statement of owner's equity, and then your classified balance sheet. So with this video, what I'm going to do is help you get through the adjusting entries because they're a little more complicated, and I don't want you to be frustrated at the end of our semester. Alright, so what I'm going to do is I'm going to help you with A through H adjustments, and this is on page 426. So I'm going to help you with these items, and then we're going to write them into the worksheet. You'll finish up the worksheet, and then you'll journalize these adjustments into the journal on the second page here. Alright, so our first adjusting entry deals with our bank reconciliation. And with that, we have to correct some ending balances of cash, and then there was an omitted check as well. So the first part that we're going to work on here is going to be an omitted check, which meant that a check was written but it was never entered into our records. So to do this, and we've never adjusted cash before, what we're going to do is we're going to also put in the service charge, and then an interest earned, and then the difference will go into our cash. So let's deal with the service charge first. So let's go down to miscellaneous expense. We're going to go to our adjustments debit column. This is letter A, and $15. Interest earned, we're going to go up here to our account interest revenue. This is going to be a credit, so letter A, and $52. We have an omitted check that ends up going to need to be an accounts receivable debit. So we're going to accounts payable here. Adjustments debit, letter A, for $1,287. Again, this was a check that we failed to record into our journal entry, so we have to write an adjustment up for that. And if we add up our two debits and subtract the credit, that's going to adjust our cash because this is our bank reconciliation. So this is going to be letter A and the credit of your adjustments for $1,250. So again, I know we've never adjusted cash before, but again, that's going to deal with some items from our bank reconciliation. For letter B, an examination of a customer's account showed that accounts totaling $679 should be written off as uncollectible. Using an aging of receivables, the company determines that the ending balance of the allowance for doubtful accounts should be $700. So first, let's go to our allowance for doubtful accounts, go all the way over to our adjusted trial balance, adjusted trial balance credit column, and put 700, because that's what our ending balance should be in that. Now, our beginning balance in our accounts allowance for doubtful accounts is $828, because that's what we get off our unadjusted trial balance. So let's go ahead and put that in as a credit, $828. And then we have our our anticipated write-off of an account, which means they didn't pay. Remember that from previous chapters. So this is going to be two parts to letter B. So in the credit of allowance for doubtful accounts, this is B1, and we're going to write them off at $679, so that's a credit. And then we're going to go to, or I'm sorry, that's a wrong line, I'm sorry. We're going to write them off with accounts receivable, B1, with $679. And then we're going to put the other half in our debit column of $679. So we closed out their accounts receivable and took the money out of our allowance for doubtful accounts that we had set aside with that year-end adjustment. All right, now the second half of this is that we have to kind of do some math with this. So it ends up being that we take our 828, so I'm going to put that into my calculator. I'm going to add in the 679, and I'm going to subtract the 700. So what happens here is that we need to go through and make sure that we get the correct total here. So we can do it a couple ways. I'm going to show you a different way here. We're going to take the 828, and then we're going to, I'm sorry, I added this instead of subtracting it. We're going to subtract the 679, and then we're going to, we know that this was our balance, so we're going to subtract the 700. So we need to adjust or make another necessary adjustment for figuring out what we need to set aside for people who won't pay of $551. So what we're going to do with that is we're going to put B2 with a credit of $551. That's our allowance for doubtful accounts. And then our bad debts expense will be a debit B2 of $551. So the $679 closes out an account that we feel is never going to become collectible. We've tried and tried and tried, so we just wrote them off. The $551 is what we need to adjust to get us down to the $700 ending balance that we have in that allowance for doubtful accounts. So I took the 828, I subtracted the 679, and then I subtracted the ending balance, and then that's going to give us that necessary adjustment of $551. Bad debts expense, debit, allowance for doubtful accounts, credit. All right, letter C, this is for depreciation for our truck, and then we'll do some depreciation for our sprayer and injector in letter D. So for letter C, we have to calculate this out. We have the original cost of $32,000 minus $8,000 for the salvage value. We divide it by its useful life of 4 years, so that's going to be $6,000 for our annual depreciation. So we're going to go to our depreciation expense for our truck. That will be our adjustments debit, letter C, and $6,000. And then we will go to our accumulated depreciation for the truck, credit, letter C, and $6,000. All right, now for the sprayer and the injector, we have their cost minus their salvage value divided by their useful life for each one here. So the depreciation for the sprayer is going to be $3,000 per year. The injector is $3,100 per year. But these are two pieces of equipment together, so we'll just add those two depreciation amounts together, the $3,000 and the $3,100. And then this is going to be our depreciation expense equipment, debit, letter D, $6,100. And then our accumulated depreciation for the equipment, letter D, on the credit side, $6,100. So again, don't put it in the equipment. It always goes in your accumulated and your depreciation expense. Excuse me. Okay, letter E. On August 1st of 2021, the company is paid $3,840 in advance to provide monthly service for an apartment complex for 1 year. Remember, we're an extermination company. The company began providing the service in August. When cash was received, the full amount was credited to the revenue account instead of the unearned account. So it was debit, cash, credit, revenue instead of unearned revenue. So what we need to do here is we need to correct that. So the advance payment was $3,840. It was a 12-month contract, so it's $320 per month. This was August, September, October, November, and December, so 5 months of service have been provided, so that's a total of $1,600. So we have an overstatement of revenue of $2,240. So what we need to do is we need to fix our revenue account and fix the unearned revenue account. Alright, so with letter E, we are going to fix our revenue account by $2,240. So this is going to be a debit. So letter E, debit, $2,240. And we need to put that into the unearned revenue. So this is letter E, $2,240. So again, this fixes the amount. We've really only provided the service for $1,600 out of the $3,840. So we needed to correct the rest of that by putting it in the unearned and taking it out of the revenue account. Alright, for letter F, warranty expense. So we have the company offers a warranty on all the services that it sells. The expected cost of providing warranty service is 2.5% of the extermination services revenue of $57,760. So probably somebody saw bugs after they sprayed for it. They put up traps, they got a mouse, something like that. So they do go back and fix that. So they think that 2.5% of their extermination service revenues will end up being warranty work. So we take that amount, the $57,760, multiply that by 2.5%, and we get for that $1,444. So warranty expense, way down here at the bottom, debit, letter F, $1,444. And then we're going to put that to our estimated warranty liability, letter F, credit, $1,444. For letter G, we have a long-term note that was taken out on the last day of December. We don't have to do anything with letter G. And when we looked at our inventory, when we counted, it actually balanced to our physical count to the actual ledger, and so there's no adjustment there at all. So letter H we don't have to worry about at all. So for G and H, there's no entries for those at all. So those are your adjustments that you have to have. Again, they're kind of complicated, so that's why I wanted to go over those with you. Now, for the unadjusted trial balance, except for your allowance for doubtful accounts, you're going to go back and you're going to fill all of these in to this column here. Don't just write in this answer as your balance. Make sure you go through and add them up to make sure you didn't copy a number down incorrectly. Then when you're finished with that, you'll go through and figure out your adjusted trial balance. So let's say I'll fill in the cash as $17,000, and we're going to subtract $1,250. So your cash is at $15,750. So that's what you'll do as you go through. Accounts receivable, the balance is $4,000. You're going to subtract out the $679, and then that's going to give you your debit balance over here in your accounts receivable. So again, once you're done with that, add them up. Add up these two columns as well. Don't forget to add up your adjustments columns too. Everybody forgets that. Don't forget to add those up. And then bring over your adjusted trial balance, remembering to use some of these adjustments. Now, when you're finished with that, what you're going to do is you're going to journalize these transactions. And so what you're going to start with here is you'll put your A's in. So you'll know you have an A debit, an A credit, and an A credit. So you're going to have 4 lines for that adjusting entry. So you'll put December 31st, and then you'll put your A, okay? And then your explanation, 2 debits, 2 credits, okay? Then you'll have your December 31st, this is B1 and B1, debit, credit, explanation. You'll have B2 and B2, debit, credit, and then explanation, and then go on to C, D, E, and F, and so on. So journalize all of those right off the adjusting entries. Now, for the income statement, because there's several sources of revenue here. Let me again show you that here. For revenue, you have extermination services, interest revenue, and you have sales. So you have 3 different types of revenue. Then you have all of these expenses. So what I want you to do for the income statement is I just want you to do a regular one like we did in Chapter 3. List your 3 revenues, then list all of your expenses. So it says single step, but just follow a Chapter 3 income statement. Okay, so go ahead and you'll do that. 3 revenues, all of your expenses, calculate out your net income. Statement of owner's equity, for that you just use your beginning capital, and there was a $10,000 withdrawal that's in your directions in step 4, so that will help you with that. And then for the balance sheet, that is a classified balance sheet. Okay, it's classified. Classified balance sheet. Now let me help you a little bit here with that, because we have that allowance for doubtful accounts. So assets, then we're going to list our current assets. Here's cash and accounts receivable. Okay, so the cash off the adjusted trial balance is $15,750. Then our accounts receivable is going to end up being $3,321. Then you're going to put in your allowance for doubtful accounts, 700. This gets subtracted, so 2621 will go over to the left. Then you will list your merchandise inventory, and then that's your current assets. Okay, so let me go back over to this part here. So these first 4 are your current assets. Excuse me. And then truck, accumulated, equipment, and accumulated. Those are your plant assets. Then you have your current liabilities, which is going to be your accounts payable, estimated warranty liability, unearned revenue, and interest. These are your current liabilities. Long-term note payable is your long-term. And then you have your capital withdrawals, which will go on your statement of owner's equity. So that will help you when you go through to do your balance sheet. And then again, 3 types of revenue and your expenses. Alright, so there are some check figures. Make sure you use those. Your adjusted trial balance on the worksheet, that's what that total of those last 2 columns you should come up with. The net income on the income statement is listed here, as well as your total assets on your balance sheet. Now, if your worksheet ends up not balancing, something happens over here, send me a picture. I can help you with that. If you're questioning the income statement or the statement of owner's equity, or if your balance sheet does not balance, please send me pictures and I will help you. Again, it's at the end of the semester, and I don't want you to be frustrated before you take the last exam. So, questions or concerns, please let me know, but please follow this as you are going through this last comprehensive review problem.